Thank you for staying tuned. Tunisia's central bank has kept its benchmark interest rate unchanged at 7.75%. The bank last month raised the rate to 7.75% from 6.75% in its efforts to combat high inflation. It was the third such increase in the past 12 months. Tunisia's annual inflation rate rose to 7.3% in February from 7.1% in January. It had reached 7.8% last June, the highest since 1990. The bank added that Tunisia's foreign exchange reserves now stand at 14.585 billion naira from 13.974 billion dinar at the same time last year. And it's the trading day for the last trading session for the week. Let's talk to Temple now for update. Good afternoon, Temple. It's the last trading day for the week. Could you wrap up the week for us?
All right, good afternoon, Chimeze. Well, let's wrap up the week. Hopefully, the market will end in the green zone this time, having seen some 6 to 7 consecutive sessions of losses. Since Monday that this week opened, actually, we've been seeing a whole lot of losses in the markets. But we do hope that with the way things are going today, it will end up being really positive. Some 0.55% gains is what we have seen in terms of daily performance so far today. And we've been seeing the gains across the industrial goods, the banking names, as well as the oil and gas segment of the market, which is up at intraday by some 0.13%. But if you take a look at the banking segment of the market, it was down some 1.74%. It was up rather some 1.74% earlier, while we saw the industrial segment of the market up some 1.57%. For the banking names, the moment we saw the suspension on trading of the shares of Diamond Bank some few days ago, we saw some investors that are more interested in tier 2 names going into other counters like Fidelity Bank, Wema Bank, and of course FCMB. In terms of, if you look at the performance of these three names since the day Diamond Bank got the suspension, you will notice that Fidelity, for example, has been up up until yesterday, some 13%, while Wema Bank rose up until yesterday, some 7%. And for FCMB, rose about 11% in terms of the way these investors are keying into the performances, because we see these investors really snapping up shares in these major counters. And that tells you that the space, the counters in that banking space are shrunk a little bit. So it gives room for investors to be able to invest in some of these other shares, to eye some of these other shares that haven't really enjoyed perhaps the kind of attention that Diamond Bank has enjoyed in the past few months. So that's what is responsible for that. But if you also now look at the top trade segment, we're seeing the banking names also dominating that sector. Access Bank is the most actively traded, although it hasn't changed in share price today, but it has done some huge billions of shares today. And if you look at what that has now contributed to what we're seeing in the entire volume of transactions that we've seen in the market today, it's really huge. Volume of transaction is now valued at about 2 billion naira plus, and that's some 180 to 200 million units of shares done so far this Friday. So when you square all of this up, you do want to be positive, hoping that the gains that we've seen today, these returns will not be reduced by anyone who's coming in to mainly take profit. In the industrial goods segment of the market, CCNN is up by more than 4%. Dangote Cement is also up by some 0.53%. So with things going like this, we do hope that the market will end positively, and we will be able to come back on Monday with hopefully this momentum being sustained. Chimeze.
Oh, well, you talked about being hopeful there, and we'll continue to be hopeful. But have you been able to speak to the traders today? What do they think about the Saturday's election? Are they really concerned about it?
So they don't really see that impacting on the market too much. you know that there are, the stock exchange has branches across the country, but not across all of the 36 states of the federation. However, some of the 18 states that will be experiencing the supplementary elections will also have the stock exchange in those locations as well. But you know that the volume of transactions that come from upland to the stock exchange here in Lagos, where it is headquartered, is not as much as what is traded here locally. Now, Lagos is an area where we are not going to really have supplementary elections, and that shouldn't really change anything going forward. Besides, the election will be holding on Saturday, and so it's definitely not going to really have much impact. But then, if you look at, if this was to be affecting the presidential and National Assembly elections, then that is where we would have probably been seeing some concerns. But we know that investors are still bullish in the market, especially with the fact that this is an earnings season. Cadbury has also posted some very positive numbers, and it is really impacting on the market in one way or the other. Because earlier in the morning we saw that Cadbury was actually gaining before some profit takers came in and then really took profit, and that's really weighed down the share prices of the share price of Cadbury. However, because Cadbury is also declaring just 25 kobo, I think for some traders that's not too impressive. But for some other traders, they do see that as something really positive, because that is more than 40% increase in terms of dividend payout from this particular consumer goods company. Well, because if you compare that to what was paid out last year, I think that's about 17 kobo compared to 25 kobo. It is an improvement. So you're seeing Cadbury now on the negative side of the market. But if you also look at an information coming from the Nigerian Stock Exchange, the fact that we have a release of the domestic and foreign portfolio outflows report for the month of February, that is something that investors and traders here are also feasting on right now. If you look at the composition of the foreign portfolio investors and the domestic investors, it says that the foreign portfolio investors performs the domestic investors in the month of February by about 48%. There were some FPIs were like 53%, while domestic investors constituted just some 47% of the performance that we saw in February. So this tells you that we're seeing for the month of March, if you compare what we've seen so far, not by way of that of that particular report, but what we've seen so far in March, we've seen a lot of huge exits of these FPIs from the market. That's from the stock market. A lot of them have actually gone to the debt market, where there seems to be more traction right now, even though we know that yields are really lower. But they keep moving in there because there's really nothing too significant to really catalyze their inflows into the equities market. But going forward, we should be seeing Q3 any moment from now. And of course, it means that a lot of these companies will begin to send in again their Q1 numbers, even though we haven't really seen full year 2018 figures. But when you put all of that together, it's one way or the other some kind of catalyst, because some of these companies will also be looking at putting out some interim dividend for traders or for investors that are found here in the market. Chimezie.
Temple, I think it's time to say, thank God it's Friday. And on that note, we draw the curtain on today's edition of the program. And of course, for the week, thank you very much for being part of it. I'm Chimezie Obi.